Hello everyone, Dividend Enjoyer here, and today I'm going to be going over my $27,361.25 stock portfolio. I'm going to be going through each security, which ones I've added, which ones I've just been holding, and which ones I plan to add more to, or what I'm kind of looking at. So to start off, we have my Chase portfolio currently valued at $19,602.54 with an overall unrealized gain loss of $845.59. This is generating me $559.59 in annual dividends. And overall, this is the main account that if you've been a long-time viewer of the channel, you know that I'm adding more positions only in this account. I'm not really adding in my Webull account, which I will cover at the end. Webull is kind of a separate brokerage that I started because I'd have more ability to trade options and do things like that, where I would mostly just sell puts and then sell calls after I got assigned. But I sold most of the Webull account off in order to buy my car with cash, and I've just been putting the money in the Chase account because it's just the easier account for me to put money into, and I don't really trade options anymore. Starting us off with the lowest value security in the Chase account, we have ticker symbol TXRH, or Texas Roadhouse Inc. I still just have $600 in this. It's earned me about $2.39 in dividends, but it is down $13.31, or in reality, probably $11 if you factor in the dividends. So the stock's pretty much flat. I kind of expect it to not really trade with that much volatility until we get a good earnings or something of that nature. But I do expect Texas Roadhouse as a business to continue to be able to grow, simply because I think that they're going to be able to make more chains. And I think that the existing Texas Roadhouse restaurants are going to become more efficient and just more profitable over time. So the existing ones are going to become more profitable, but the real money is in more franchises opening up, which I also think is going to happen. And my reasoning for this is that I think that fast food overall has become a little bit too expensive. And I think that the reason for that is that a lot of these fast food companies have become very mature, and they need to be charging more money to be able to increase their profits each quarter. I also think that just everything has become more expensive, so it's been harder to operate as a fast food company. But as a consumer, it's kind of hard justifying going to McDonald's and spending $30 when you could go to Texas Roadhouse and spend maybe $10 more and get a steak, get the sit down experience, and have a really good date night or something of that nature, right? So I think that Texas Roadhouse overall, just from the trends that I've analyzed and my own personal stock analysis of Texas Roadhouse, have shown me that there is already value currently there in Texas Roadhouse. And I just think, from kind of a gut intuition perspective, I think that the business is very strong, and I think that it's going to continue to grow. Next up, we have Prologis, ticker symbol PLD. I have $1,000 into this stock. It's currently down 2.57%, and I have earned, as you can see, about $4 in dividends from this stock. This is a triple net real estate investment trust that specializes in warehouse logistics real estate, which essentially means that they're a company that own a lot of warehouse space, and then they're able to rent this out on multi-year deals. But the triple net part of it is very interesting because that essentially means that they do not pay for any of the property taxes, any of the improvement, anything that has to do with the actual warehouse. It's almost like the person renting from them is the owner without the actual ownership, because they still are able to collect that rent. And my thesis for buying this is that as technology and as everything becomes more advanced, I think that logistical networks are going to become more valuable. I think they're going to become more necessary for facilitating different business. I think that overall the logistics business is growing, and I think that it's going to continue to grow. And I think that this company is going to become even more valuable over time. Next up, we have Waste Management, ticker symbol WM. I'm currently up 10.6% on this stock. This has been my best performer year to date. I know that they just reported lower revenue than expected today, so not really too hyped about that, but I don't really care necessarily. I think that this is a very strong business, and it's very resilient. It's going to continue to grow each year, and that's why I own it. I understand that there's going to be some quarters that are going to be very much exceeding expectations and some that are going to be falling below. And I'm very happy to just hold this stock. When this stock goes on sale, that's when I'm looking to buy. I just don't think that's the right time for me right now. And I've kind of illustrated my thesis for this stock very well over time because I've always said that this stock is going to perform very well under a recession. That's why I wanted to own it. I thought that it was a very just fundamentally amazing company because it was able to perform pretty much under any economic condition, and it's pretty much proven me right. I'm going to be a long-term holder of this stock. I think that the waste management business as a whole is very interesting and very strong. I don't think that it's going to go anywhere anytime soon. And if you're a long-term investor, I definitely think you should consider having a good value in mind for waste management and potentially investing if you think it's the right decision for you. I think it's the right decision for me. I want to own this stock for ever, basically. I mean, I want to have a ton of this stock and then just be able to hold it over time and collect the dividends and not really have to think about it, because I think it's one of those businesses that you can really just hold and not have a lot of worry about. I think that it's very safe, very secure. And overall, I think in any economic condition, you would be very happy to be a waste management investor. Next up, we have Meta, ticker symbol Meta. This was a stock that I talked about adding more of for, I believe I bought a share at around $484 last week, or I made a video about it this week. And I'm only down 3.91% on this. I was down significantly more, and there is a lot of volatility with this stock, but that just means that there's more opportunity for long-term investors to be able to pick it up for a good price. Now, I kind of think that Meta's value is around the $600 mark, but I also think that with Meta, there's a lot of interesting upsides that could happen that aren't really being taken into account. I think that there's a lot of money spent into R&D and innovation, and I think that Meta could hit something with a lot of success. Overall, I'm a long-term investor in this company because I think that it's very monopolistic and very strong. I think that Mark Zuckerberg understands social media and how to monetize it better than anyone else. I think that he's been involved with this literally longer than almost anyone else other than the MySpace creator or maybe the Reddit creator. But Mark Zuckerberg's been the smartest one about it and has created the biggest social media company. And I think that this company is going to continue to innovate and be strong into the future. I think that they're doing the right thing by investing so much money into AI. I think that you have to kind of get risky when you're a mature, big business, because that's the only way that you're going to get really good payoffs. I do understand the uneasiness, though. But if you really factor in the real cash flows that are there, I think that Meta is valued around $620 or $600, simply just based off of the fundamentals of the business and the past record of growth. I have gone over Meta in a few stock analysis videos, which is why I bought into it, but I have seen highs and lows. I mean, like I said, this stock was trading for under 500 about a week ago, and a couple months before then, I remember when it was trading for around 720. I had 2 shares then, and I didn't sell out, and I don't feel bad about it because I really believe in Meta for the long term, and I think that the long-term investor is really going to win with Meta. Next up, we have overall my biggest position, as you'll see in my Webull account. Not the biggest position in the Chase account, obviously, but it is Energy Transfer, ticker symbol ET. I'm down 9.93% in the Chase account on this, but I have to say that this stock has done amazing for me in just my investing journey, and overall, you're going to see in the Webull account how I'm up a pretty ridiculous margin on it. And I just to describe the business of what this company is, because I understand a lot of people may not know what Energy Transfer is or what they do. They essentially own the pipelines to move natural gas, and they charge a toll for that. They have an incredible dividend, and I think that they're going to be able to continue to grow over time because I really believe that energy demand is going to increase into the future. And overall, I just think that Energy Transfer is an amazing company with an amazing dividend and just very strong. I think that you would be very foolish not to be involved somehow with the pipeline infrastructure sector, because I've done a lot of videos on different pipeline companies on my channel, and I found that really most of them are undervalued for what they are, because a lot of people don't understand that they're inflation proof. In a lot of ways, they're recession proof. The only time they really got hit badly was during COVID-19 when energy demand was down at insane once in a lifetime type of levels. But I do have to say that there is some risk, as with any energy companies, that a lot of these companies are very highly debt funded. So just know that going in. But overall, I've made a lot of money off of Energy Transfer, and I'm very happy to be an investor in Energy Transfer. And I actually like when the stock is performing very poorly, because that means that I can buy more shares for less money and get a higher dividend overall. Next up, we have ticker symbol AXP, or American Express. Now, I've kind of talked about how this has been a position that I've been adding to more, just because I think that this is maybe the safest company that I could be investing in, with one of the best track records. They had a good quarter. They're a very strong business overall. I think that over time we're going to see that they're going to continue to grow and be strong. And I'm very happy that American Express has fallen in the way that it has, because it really helps me to get a lot of shares for very cheap. Now, I would love for American Express to dip again for me to be able to buy more, just because I think that the business is amazing and I think that it's very strong. And over time, you're going to do very well as an American Express investor if you just hold on for the long term. But I wouldn't count on getting these prices for much longer. Because, I mean, who really knows what's going to happen with the current administration and everything like that? It's kind of random with what's happening with stock prices, and there's a lot of uncertainty. But that means that there's a lot of deals right now. And I think that American Express, even now, I mean, I was buying at a much cheaper price prior, so I got some pretty good deals. But I think even now it's at a pretty good place for people who want to get in. Next up is one of my favorite companies, which I've talked about at length, Amazon, ticker symbol AMZN. I'm currently down 9.93% on this stock, but I think that this stock is ridiculously undervalued and overlooked for what it is. I think that AWS is going to revolutionize a lot. I'm fine with them not paying me a dividend, and I really love the fact that their cash cow business of the logistical network that they've created is funding all of these different ventures that they're investing into. And I think that they are one of the smartest companies about putting money in the correct places to make more money. Now, I've made a very big bet, obviously, on Amazon. I have about $2,700 in, but I think that I'm going to be looking back and wishing that I would have allocated more money to this stock particularly, just because I think that this stock is going to be in a very good place going into the future. I think that it's a very strong business and a very once-in-a-lifetime type of business, and I think that over time we're going to see that Amazon continues to grow just like it always has been able to, simply because of the way that they are able to take calculated good risks, and they're very smart about what they do. We've seen time and time again, they've entered into these new spaces, and it's worked very, very well. And I know so many people that have Amazon subscriptions and use Amazon regularly. It's become kind of a staple of American life, and I think that Amazon is going to prove that they are really the strongest company in the world. I would not be surprised if Amazon was the most valuable company in the world in a couple of years, simply because I think that the growth is really there, and I think that they're going to create things that are very useful to society going forward. Next up, we have Salesforce, ticker symbol CRM. I'm currently down 13.28% on this stock. I currently have around $30,678 that I've invested into the stock. And I just have to say that I'm very surprised that this one has dipped as well. Same with Amazon. I think that Agent Force is going to be huge. If you look at their revenue as well, you could see that it's consistently gone up every single year. I think that they're going to continue to be able to increase their revenue because, as you know, with Salesforce, I've talked about the business model a million times. How it works is they essentially do all of your interface with your customers, and it's very expensive to get out of the Salesforce ecosystem. It's almost impossible. So the people that are in are locked in. I think that for the long term, it's a very good bet that they're going to be one of the best performers in the S&P 500 for that. And the fact that when they get more money, they're able to create products that are either completely new and make them more money, or they're able to improve their existing products so that more people want to use them. And I think that Salesforce is really just extremely valuable because a lot of people underestimate software that's very helpful in our daily lives. And I think that the value is here. I can see that the company continues to grow consistently every single year, and I'm going to stick with Salesforce for the long term. I think that this is a no-brainer if you want a company that's going to grow consistently every single year. I think expectations were a little too high on Salesforce personally. Obviously on Wall Street, there's kind of a different view where you want each quarter to do well, and they're judging companies by the quarter, not by the year or not by the 3 years or the 5 years. They're just looking at what the company is making this quarter because that's what the bonuses are based on, and they have a very short-term view. But if you have a really long-term view and you're a long-term investor, I think that you would be very happy with Salesforce in your portfolio, especially for the long term, especially if you think that their agent force is going to be successful and you believe in Mark Benioff and just Salesforce as a whole, which I really do. I think that Salesforce is going to innovate in very good ways. I think that they have network effects that are very impressive and very strong. And I really think that Salesforce is a very strong company that I want to be an investor in for the long term. Next up, we have Vici Properties Inc., ticker symbol Vici. I'm up 2.24% on this, but it's a little bit misleading because it's saying that I'm up $126, when in reality I've invested $5,500, but with my dividends you can see that I'm up $258.70. Sorry. So Vici is a very interesting company because they are a triple net real estate investment trust, just like Prologis, but they specialize in real estate for casinos. So what that means is that they are not actually taking on the risk of running the casino. That's MGM or all these different casinos that they own, which they are the biggest owner of real estate on the Las Vegas Strip. They're just the ones collecting the rent, and it's up to the casino operators to maintain everything, do all the work, pay the taxes on the building, everything like that. So you're not really getting the risk on if the casino doesn't perform well. The only risk you're really taking on is if the casino is going to be able to afford their rent, which I think is going to be very likely unless we have another COVID-like event, which I feel is extremely unlikely in our lifetimes. I don't think that people are going to want to have another lockdown or anything like that. I think that Vici long-term is going to be a very good investment for me. It's kind of the perfect investment for me because the way that Vici operates is they collect all that money from rent, and then they're able to either pay off some of their debts. They have to pay a dividend because they are a real estate investment trust. So it's around a 5 or 6% annual dividend, depending on where the price of the stock is. And another thing that they do with the remaining money that they have as retained earnings is they'll buy another property, and that brings in more cash flow, which grows the company as a whole. So I think that Vici is just going to be a very good long-term play for me with a lot of passive income there. I think that it's a very strong company that's very hands-off. I've only really been buying this stock lately when it dips below $30. That's kind of my price point because it does kind of fluctuate a little bit. It's not really as volatile as these tech stocks that I'm holding, obviously, but it does fluctuate, and I have put a significant amount of capital down because I think one of the biggest mistakes I had early on was I was buying a lot of the tech companies at kind of a premium just because I like the business as well and I really wanted to diversify. But I really knew that Vici was undervalued at $30 or lower, and I didn't just put all my money into that because I was kind of self-conscious about the fact that I wanted to have multiple different securities and things of that nature. So I think that was a mistake. And if you know something is undervalued, like you have done the research and you really know the industry and you think that an asset for the cash flow that it's going to generate is undervalued, I don't believe you should really diversify. I think you should get very greedy and just buy that asset. Now, obviously, I'm not a financial advisor. That's not financial advice, but that's just something I've learned in my own investing journey, that it was a big mistake for me to not put 10 grand into Vici instead of 5 grand. Now, moving on to the Webull account, I just want to say that these are gains from when I was trading. So this is about $7,600 in this portfolio that I just keep here. I collect the dividends. I don't trade it. This portfolio is not going to move at all. If you've been to the channel or you've watched one of these videos before, you don't really have to watch this part. But I will say that it's performing a little bit better than last week, so I'm very happy with that. But I have some DraftKings shares from when I would sell puts and then when I get assigned and sell calls. I just kept a little bit of DraftKings in there. And I really think that DraftKings is a good company with a lot of future growth. However, I think that it's a really risky bet because we're in the infant stages of sports gambling legalization. And overall, I think that DraftKings is going to be the winner, but everything's kind of up in the air with DraftKings, so it really could go any way. I could also see MGM winning. I could see FanDuel winning. I could see a new player entering and really taking a lot of market share. They also have a ton of debt. They're in their infant cycle of their company where they're really trying to establish themselves, especially in new states that legalize sports gambling. So I just wanted a little bit of it because I made a decent amount off of DraftKings already. So I thought, what the heck? I'll just put 150 in here aside and we'll just get to see how it does. If they have significant gains, I'll be very happy. I'll probably sell it off and then just keep the cash. And if they don't, oh well. And then I also have 5 shares of Microsoft. I really don't want to be left out. I think that Microsoft is an amazing company. I think they're very similar to Amazon. And Microsoft has been the first stock that I ever invested in. And I really think that their business model is very fundamentally solid. I think that they have a really amazing business model, very similar to Amazon's, where they have a lot of cash cow businesses that bring in some serious money, and then they're able to use that money to invest in smaller things that have a lot of growth potential. So I really like Microsoft in the long term, and I could totally see someone choosing Microsoft over Amazon. I just personally like Amazon more just because it feels more material to me. And just like a better business than the software, just because I feel like there is a chance that the Office suite could be replaced in the future, whereas I don't really see that happening to the logistical network of Amazon. And then finally, I have 328 shares of Energy Transfer. These pay me $106.60 a quarter. I think they just increased the dividend though, so it's going to be slightly more. And I'm very happy with my Energy Transfer position. I don't have any complaints about it. I just collect the dividend every quarter, and that's pretty much all I do to open the app. And I'm very happy with this little portfolio here because this would be the first thing that I would sell off if I ever really needed money. But it's producing me a lot of solid dividends that are able to be used for, personal things or just reinvesting into the Chase account. And that's kind of my full portfolio. I hope you enjoyed the video. I hope it was, gave you my kind of perspective on each of my holdings. And I'm really happy that we're up this week from last week. And, I'm also really happy with how the channel's going. I'm very thankful for all of you who have supported me through this journey. It's been a really enjoyable 5 months almost on YouTube, I think now. And I'm just thankful for everyone who's come here. So if you made it to this far in the video, thank you. I really appreciate you. Have a great rest of your day. Bye.